What's up, YouTube? Welcome back to my channel. Happy New Year. Happy 2022. I'm so grateful to have had an amazing bull run along with this S&P 500. I hope that your trading this year so far has gotten off to a good kick. I don't know what I'm titling this video. I'm going to catch up a little bit on my trading year last year, and also answer one of my probably most frequently asked questions, which is how do I decide if I'm selling a put credit spread or a call credit spread in the morning, or how do I get bullish or bearish? As a reminder, or if you're new here, I am primarily a 0 DTE trader. I sell same day expiring contracts, not 2 weeks from now, not 30 days from now. I sell contracts that expire today. And I have to mention that because a 0 DTE day trader is a little bit of a different breed of day trader, and how we develop a directional bias is probably much different than that of a longer time frame day trader. Most of what I trade is one shot, one kill, one entry, one exit. I rarely make adjustments to my trades. And so, having said that, developing a directional bias is critical, but doesn't have to be complicated. If you know me or have watched any of my previous videos, simple is my jam. So I have been selling vertical credit spreads pretty consistently on the S&P 500 for several years. The way that I trade is to enter a 5 or 10 wide vertical credit spread within the first hour of the market and aim to be out within the first 2 hours. So put or call spread, how do I decide? Let me show you an easy way to develop a directional bias by using the opening range breakout or opening range theory. If you Google search these terms, search it on YouTube, you'll find probably tons of videos, but everybody trades it a little bit differently. So let me show you how I trade it. Spoiler alert, it's very easy, and I will go over some of my results from 2021 trading this and so far this year. All right, friends, we are on a 15-minute chart for the S&P 500, ticker symbol SPX. And I'll go over every day here, but I just picked the second to last week of the trading year 2021. So let's zoom in on this Monday, a 0 DTE day. And what I would do, step one, is wait 15 minutes. Do nothing for the first 15 minutes of the trading session. And then when the first candle is done forming, I mark off the top and I mark off the bottom. I like to include the wick if there is one. Or you can set chart alerts, right? So that you get those little audio dings when one of those levels breaks. And then I wait for one of those levels to break. So this candle broke it to the downside, so I would sell a call credit spread, and with the expectation that there's going to be enough of a further downward movement, at least enough for me to capture 50-ish cents. So that's really it. That's how I'm choosing a call or a put. Let's go forward to the next 0 DTE day. So here's Wednesday, December 22nd. Wait for the first 15-minute candle to form, mark off the top, mark off the bottom, and wait. This candle breaks it, so to the upside, so I sell a put credit spread. That's it. And I wait to capture 40 to 50 cents. And here is Christmas Eve. This was a 0 DTE day, even though it's Thursday. Oh no, not Christmas Eve, December 23rd. So mark off the top, mark off the top, mark off the bottom, wait for a candle to break that level. Now you can see that this candle doesn't break it, so I take no position. I wait until this candle breaks it, and even though it probably only broke it by like 50 cents, I still went ahead and sold a put credit spread. And on this day, which was December 23rd, I entered at 7:16. These are Pacific Standard Times, of course, and I was out by 8:50. So this day did take me quite a long time to capture my 50 cents. But How do I choose my strikes? So on this day, I know that I'm going to sell a put credit spread, but how do I choose my strikes? Well, it's pretty simple. I just want a spread that is outside of the first candle, and that gives me at least $1 for a 5 wide, somewhere around $1. So sometimes I'm entering 90 cents, sometimes $1.40. It just depends on the day, the expected move, etc. So on this day, I did go short the 4,700 put. And yeah, let's see. Let's go back, and I actually did trade it on this Tuesday, which was a 1 DTE day, and it doesn't look like it worked, but it did. I marked off the top, marked off the bottom. When this candle broke, I sold a call credit spread, right? Because it broke to the bottom. And I went short the 4665 call. So there must have been premium way far out here for $1.50. And then I closed it when it reached $1.10. And it reached $1.10 at 737. So somewhere over here. Yeah, so that's that week. Let me go over a losing opening range breakout day. All right, so you are looking at the last trading week of 2021. Again, we're on 15-minute time frame. So I traded it on every 0 DTE day. So this Monday, this Wednesday, and this Friday, New Year's Eve. On this day, mark off the top, mark off the bottom. It broke to the upside. I sold a put credit spread. It worked just fine, pretty clearly. The rest of the day, it continued up. On this day, marked off the top, marked off the bottom. It broke to the downside. I sold a call credit spread. It worked just fine. I captured 50 cents on this Friday. And on this day, it didn't work. Why didn't it work? Mark off the top, mark off the bottom. This large red candle breaks it to the downside. Here's the problem. I lost this day because I had a really bad entry. So I sold to open a 5 wide credit spread for 65 cents. My stop loss rule is 1x. So if the price of my spread increases to $1.30, then I'll stop out of it. The problem is I probably entered like right here at the bottom and then got stopped out when it started climbing back up in these next 30 minutes. So my entry time on this day was 7:16 and then I was out at 7:41. So I got stopped out pretty quickly, like within this little range, because I took such a bad entry. What I should have waited was to see, do you see the gap here? It kind of like went past the gap and then bounced up. So maybe I just pulled the trigger too fast on this day, but anyways, so I lost on that day. Let me go over my trading results from 2021. I started trading and tracking this in July of 2021. Throughout the rest of the year, I traded this 100 times. I won 84 times. My margin requirement on average was about $2,000. I traded pretty small the whole year. And my profit was $10,135. I did trade these on 1 DTE days, and I tried to go like half position sizes on these highlighted days are 1 DTE days. So sometimes I find this stuff so boring. So I tried to just recap the days based on P&L. So July, there's my P&L, etc. And my best month, I guess, according to my win rate, was October. My worst month was in November. And I made so little in August because I put a note here, and this is actually something I should mention, is that my August results are not totally reflective of the strategy. I was on vacation the first week, and then I missed 3 to 4 winning days, and there was 3 days where I was watching, but the opening range didn't break at all. So some days, actually, the opening range never breaks. I mean, those are really rare days, great iron fly days, but be aware that there are some days where the range doesn't break. So let's see, my Best month was this month right here. I only had one loser. I entered at 80 cents. I stopped out at $1.50. I was in for 5 contracts. The rest of the month went great. And here's November, my worst month. I feel like that was also a bad month for me in 2020. But anyways, I had 1, 2, 3, 4, 5, 6 losers. And that also brings me to another point I want to make, which is sometimes when I don't win on the first trade, and if it breaks out to the opposite side, then I'll trade that trade as well. So you can see that my call failed, but then it broke to the downside. Then it broke to the upside, and so I sold a put, and then that trade worked. And I think to date, I've traded the second breakout 6 times, and every single time it's won. So having said all that, look at my January results. So I've traded it 4 times. The first trade of the year, big fat loser. Oh, by the way, I increased my contract sizes. And that was a 0 DTE day. The next 0 DTE day, another loser. I almost rarely lose. I don't think I've ever lost back to back. So on this Wednesday, when it broke to the downside, I sold a call and it won just fine. On Friday, January 7th, I didn't even trade the first breakout. I just waited for the second breakout, traded that, and it won. So I'm actually still in the red so far for this year. All right. I hope that helps somebody. There you have it. Quite possibly the easiest way to get bearish or bullish on a 0 DTE day. I have seen traders use this on a 5-minute opening range, a 30-minute opening range, and of course on other tickers. But I'm pretty mechanical in my trading. I haven't ventured much outside of the S&P. I did try this on the RUT for a while. You know, that's also 3 weekly expirations, also cash settled, not as liquid, and I just didn't have the same type of success. And I also tried, instead of selling a credit spread at the breakout, I tried buying just a straight SPY call or put, but also inconsistent success. So I'm gonna just stick with what I know, what I love, the S&P. I hope that this video helped you. We've had a lot of success with it. I post my trades live in a private forum. I will link that below if you'd like to join us. Otherwise, I will make another video in a month or 2 and I'll update you on how this is working. Take care, guys. Happy trading. See you next time.